Extending on the same question about fiscal space and the money available for public sector investments, we've been seeing a lot of traction in the revenues for the central government. Service sector, service tax, for example, is growing upwards of 30% over last year. So my question is, A, what is driving this growth in service sector revenues for the government, or the service tax revenues for the government? And B, will that be channeled into the public sector investments by the government?
One reason could be that the service tax rates went up in this budget. So it went up from 12 to 14 to 40. So 2 percentage points, 2 on a 12 basis, that's a, whatever, 16% increase. So some of it is that. Meaning the full thing is not understood. You know, this tends to be lumpy. As you know, that the numbers are given, released month by month, but they are often lumpy. So the real clear picture emerges when you are close to the end of the fiscal year rather than in the middle. And the second part of your question was that will this be spent on other priorities? But that's the prerogative of the government. So we'll have to watch whatever the budget promises are, the budget allocations are. As everybody is saying, that there's greater scope for increasing public investment, partly because of all these unanticipated savings.
I don't think you will necessarily have more money on the table. I mean, there would be shortfalls elsewhere, and we are lucky that services are providing more revenues than was anticipated. But to see this as a net addition to the revenue or the resources pool, I think would be a little ambitious. We are asking for more money for a recapitalization of banks. I mean, there would be other overshoots elsewhere. There would be a problem with excise collections and so on. So it's not a net sort of additionality, but something just that perhaps balances the picture without too much of an overrun in the fiscal deficit.
Yeah, just to quickly add, any indirect tax increases are a combination of rate increases and the underlying activity. So I think more so the excise tax collections from the data we look at have been really buoyant, and it's a combination of both higher rates, but also a pickup in the underlying activity as we see it.
Just a point of caution though, the numbers are coming actually over a little lower base, because if you remember last year, April to July, the new budget was presented in July only. So a little bit base effect also is involved over there.
Yes, ma'am.
Thank you. Prachi ma'am, firstly on excise, if we tried doing this exercise, if we net out the impact of petroleum price increases, April to July excise ex-petroleum showed a degrowth. So the underlying economic activity, I do not know how much should we view the strength of it. My question really is, if the House believes, and it's debatable, that India is in fact in a growth slowdown right now, then why offer a 300 basis point worth of real rate in the last financial year to the savers, which incentivizes them more to save versus consume? If the problem is of funding growth in India, then why not open up FII limits in a manner which can allow FIIs to take hold of government securities and create more space for productive sector lending in the country? Whoever would want to answer.
I would sort of come in on the FII question, and I feel reasonably strongly about it. And if you look at vulnerability of currencies and markets in times of a potential global shock, it could either be a devaluation by China, or more importantly, a Fed rate hike and a sort of a repricing of emerging market risk and so on. Vulnerability is not just about the current account and the reserves that we have. It's about various other facets. And one of the problems that we have had is that we sort of actually caught up with a number of the Asian markets in terms of foreign ownership of sovereign debt, the quantum of short-term external borrowings and so on. So we are not quite there, with a lot of our Asian peers, but we've been increasing very, very rapidly, especially if you look at the foreign ownership of sovereign bonds and so on. This is a very major vulnerability indicator, right? And I don't think at this stage, right, we can just allow this money, bank on this money to come in and, make up for resources that should be sought elsewhere. This is a quick fix with its costs. And I think we need to be aware that it leads to, certain problems, especially when there are, likely shocks around the corner.
I'll just make a more mundane point about this, because this question comes up repeatedly. I think that there's also a technical issue here. Until about 3 weeks ago, before the Chinese devaluation, we were in a situation where the BOP is still in strong surplus, and the RBI was intervening heavily to try and prevent more appreciation, because the real exchange rate's up, 11% since last year, and the concerns about exports keep rising. So the question is, if you now open the tap to money and you get $5 billion more, the RBI just needs to intervene that much in proportion to prevent the exchange rate from appreciating. That then creates domestic liquidity. And this is the point in time in the year when liquidity actually is in surplus, the interbank liquidity is in surplus. So what you then have to do is sterilize that, because you don't want the call rate to go to the reverse repo rate, which is 100 basis points below the policy rate. So then you have to sterilize that. Now, one of the ways to do that is to do an open market operation sale. But what does that do? That puts pressure on bond yield. So in a way, you're coming up against the impossible trinity, where if you're trying to manage the exchange rate and you want independence of monetary policy, you occasionally have to have some limits on capital inflows and outflows. So I think there is a sort of mundane reason for that as well in the next couple of months. Of course, now with currencies under pressure, you don't want to be opening up limits from a position of weakness, not strength.
Now we'll take just one more question.
Good evening. I have a question regarding exports. What, in your opinion, is the game plan that the government should follow with regards to reviving export? So the reason I ask this is a recent IMF paper just released last week, which talks about how trade intensity of global growth has come down, and that began in 2000s but got accentuated during the recession. So given this, in addition to all the other factors that you guys all did mention, what should be the game plan from the policy perspective? Thank you.
Actually, there's no easy or short answer to this. Can I just... there was a very excellent paper prepared by the Commerce Ministry, a strategy paper of how to double exports in 3 years. That was put out in 2009. It's on the website still there, and it still is a very good blueprint. So I would strongly encourage you to look at it. Also, we have, so there was an ambition to double exports at least over a 5-year period from 2009 to 2014, but we didn't quite achieve it. I think Soumya gave you the numbers. Again, this time in the trade policy from 2015 to 2019 or 14 to 19, we have an ambition to again go to $900 billion. We are currently at 310 or something, but the 900 billion includes services. So the strategy includes a variety of things. The strategy includes, for example, there's a lot of threat to world trade because WTO itself is being undermined. The WTO Doha round is still not concluded after 15 years. So now there's the emerging mega trade blocks like TPP. There's the RCEP negotiations even as we speak. And there's all kinds of barriers coming down, but trade blocks are getting into islands. So if you're not a member of TPP, you can't export to the US. You might have more barriers like intellectual property rights, IPR regimes, and environmental standards and labor standards, which we may not be able to meet. So, the strategy will involve not only supply chains plugging into supply chains across borders, reducing our insistence on rules of origin and value addition for when you want to have something in your FTA, but also strategy might involve joining these trade blocks, trying desperately to get into TPP or APEC. So it's a variety of things, but I still think there are some lower hanging fruit like going into the non-English world for IT services. I mean, with due apologies to the IT software people, but I feel there's a great opportunity, especially in countries like Japan and even China, which is dominated by state-owned enterprises, to focus our services exports there. And I mentioned pharma also earlier. Sorry. Yeah.
So just wanted to say, so exports are determined by, three things as, one is, as has already been discussed in the panel, one is, of course, exchange rate, global demand, and the other thing which also comes out in most of the work we do is domestic supply constraints are a very important determinant of exports. So in general, whatever, the things which I talked about, the constraints in, creating productive jobs in the manufacturing sector, like regulations, funding, quality infrastructure, land, labor impediments, they are all important to strengthen your domestic supply capacity and in turn your exports as well.
Thank you very much. I'll request Chairman Madam to kindly present a small momentum from our side to our eminent panelists. And a big round of applause. Thank you, Madam. This is a very interesting and thought-provoking discussion. Now I'll request Shri P. Shri Ram, Managing Director, National Banking, State Bank of India, to propose vote of thanks, sir.
Very good evening to all of you, and unfortunately and most reluctantly, I think we need to bring down the curtains on a very, very informative, educative and lively sessions, 4 sessions today and about half a day the day before yesterday. I've been asked to summarize some of the key learnings as well as to propose a vote of thanks, and I think I beg to differ with Dr. Ghosh that he had a challenging job. I have an even more challenging job because to summarize 5 sessions in 5-10 minutes is going to be very difficult, and I hope I do justice to that. Actually, I'm reminded of a story which one of my colleagues said a few years ago. A general, American general, had gone to Korea, and he was giving during the Korean War, I guess, and he was giving a lecture, and there was a interpreter who was translating all his words. So at one point of time, the general stopped and narrated a joke, and in his own style and with a lot of fervor and passion, and gave a joke. And then there was pin drop silence because nobody understood. And then the interpreter came in. So he looked around, looked at the general, and then just said one sentence and stepped away. And there was huge applause and clapping. So the general found it very amusing, and he said, or rather he found it he got angry with the translator and said, look, I said a fantastic joke, and all he did was say a single line. So that chap said, the way you said it, the manner in which you said it and everything, I just can't replicate that. And therefore what I said was just, the general has told a joke, please laugh. So so my duty probably is also that, I can't get into the shoes and all the expressions and the emotion, the frenzy of all the conversations, the speeches and the discussions that happened over the last today, and especially the speeches by the Honorable Finance Minister and the MOS. But I'll try to just summarize some of them. We were very fortunate to have the Honorable Finance Minister day before yesterday to start off the second SBI Banking and Economics Conclave, and in his own inimitable and absolutely fantastic way, he did lay out the plan for India to be poised for 8 to 10% growth, and also the series of measures that the government has taken over the last 1 year. Transfer of wealth to consuming nations by the way of commodity prices going low was something that he dealt with at length, and he said the opportunity is there for all of us to make use of. the services sector growing, the good harvest, the indirect taxes trend were all positive, and the impact is going to be only good for manufacturing. Subsidy rationalization was done without creating a ripple. I think it's the case of diesel now on the DBT side. Reforms on taxation is on the way with the GST whenever it comes, and the corporate direct taxes rates. Spending on infra will increase, and will obviously give opportunities for the growth. Large corpus of public investment into irrigation was the story of success story in Madhya Pradesh of 18 to 20% agriculture growth. Of course, the two major things which are very important for us as bankers is one is the reforms in the DRT, which was earlier referred to in terms of doing it all online, and the other was in terms of Prevention of Corruption Act, which is where we have specific issues there. And one of the things that is lying in Parliament is in terms of the erroneous decisions causing loss to be also treated as corrupt decisions. That is going to undergo a change, and probably that will help us bankers to to take decisions without fear. So all in all, very, very positive finance minister's speech to us, and we are just hoping that there is a fillip to growth and we get into that 8 to 10% growth mark. The MOS Finance also talked about the macro parameters being extremely favorable today for spurring growth, and he did say that we can seize the moment as it comes. Good monsoon will also give us a good opportunity, and so will the innovation and entrepreneurship of our own Indian population. The success of the Jan Dhan scheme was something which he echoed very, very much. So all in all, there was in the inaugural session day before yesterday a very, very positive intent, and which was carried forward today in the first session, the tete-a-tete or the conversation between two most powerful people in the Indian finance and banking, Dr. Rajan and our chairman, Mrs. Bhattacharya. And whatever may be the outcome of that conversation, I think the headlines have already made it, in the sense that the headlines in Economic Times is teaser rates again. SBI asks RBI to allow us sub-base rates. So I think the headlines is always cornered for tomorrow. And but then 2-3 major points that came out of that discussion is one is, of course, we did get an internal view of what the two powerful people speak when they meet. One is, of course, that the rural demand, depending on the monsoon, how it peters out really is something that will spur growth, is something that came up. And the other is not really a great worry in terms of the Chinese depreciation. At the moment, at the current levels, we are quite geared to address that. Of course, the major issues regarding interest rates and NPAs were discussed, and there was a lot of optimism in the way forward in terms of trying to work towards an open conversation between the bankers and the central bank towards making the lending process much more secure and taking the banking to strength, banking industry to strength. Coming to the CEO's panel, we did have some of the key features that were there were about manufacturing, skilling, startups, digital, de-risking of projects, good governance and politics. Mr. Kant's, of course, very exuberant and extremely positive forbearance was to be seen, and I'm sure that will rub off on all of us as we continue to interact with them. Of course, one of the key points that he delivered was that the complicated place to do business has to be simplified, and the ease of doing business must be made available. We need to fast track, and without infra, we can't achieve 9 to 10% growth. Success stories of some of the larger companies like Renault and GE, in India has to be replicated. There were other comments by other CEOs in terms of pharma sector being over-regulated, and of course we had both the private sector corporate heads being extremely great fans of the Secretary DIPP. So it was something that public-private partnership at its maximum. So, of course, the issue regarding power and Mr. Naik's comments were well received. We have to go some distance in terms of trying to push the power sector up, and there were, of course, a lot of takeaways from there. The banking side, one of the points made was Mrs. Kochhar was end-to-end solutions for infra that are predictable should be brought up so that we have a better and more plausible solutions that are there. Then we had the second session on banking and judiciary. I think I was wondering how Rajneesh is going to mediate or moderate the lawyers and the former Justice of the Supreme Court. But fortunately, two of them had bad throat, so he could get away with that. There were a lot of general banter between Mr. Ganguly and Mr. Luthra, which literally set the tone for for the session. I think I in that sense, I don't know whether you've heard of the Pythagoras paradox, in terms of in legal language, now it's a logic problem for that. What they said was there was a lawyer, a teacher in law, of law, who had a student who couldn't pay his fees. Now he said that, look, I'll teach you for free, so long as you pay me back as soon as you win your first case. And so he agreed to it, and he paid the fees, and at the end of the day, the student succeeded, went through law college, became a lawyer. Now for quite some time, this chap was following up with the student to pay, but the chap was avoiding him, saying that he has not yet won. So they went to court, and each of them decided to argue for each other. So the lawyer, the teacher lawyer, who's actually Protagoras, he said, he argued saying that, look, if I win the case, then the person has to pay me because I have won the case, and you have to give a decision in my favor. And if I lose the case, he would have won the case, and he has won his first case anyway, he'll have to pay me. So that was his argument. From the student's perspective, it was completely the reverse. He said, if I lose the case, I don't pay him because I have not won the first case. And if I win the case, I win that I don't have to pay him. So I will anyway not pay. So this is a paradox which is there, and this is actually quoted in legal history. And these are some things that continue, these sort of, when we talked about adjournments, I think the adjournments come out of such, cases that will happen. But the important thing here is that together, in some way or the other, as Ms. Zia Modi has said, we need to make sure that we are well prepared while we, as a bank, while we go into litigation, and try and make sure that the contracts and the documents are well prepared. We are always firefighting, and that is one thing that we need to look at. Of course, the supporting bankruptcy laws and other things will surely be there. But one of the things which stood out, and which was a thing that they said, is about the average stat is 1,420 days in a legal system. I think that is something that we need to, in some way, look at good governance. And I think for us bankers, stat is never more than 2 digits. So that was a very interesting session, and I am sure a lot of the first of its kind, which was attempted, came off very well. I'm sure the ideas that they are going to give us, offline to the bank, will give us a lot of opportunity to discuss with the government, with the legal department or the legal ministry, to take forward this position. The CFO panel, of course, had a very easy job to disagree on how the capital can be brought in. The figures that Anant reeled off is mind-boggling, all the sorts of the $35 billion and all that. But I think we need to accept that the capital markets today is looking at banking in a much more positive way, as and when there are a series of announcements that come which affect the banking sector. Just some few announcements in the Indradhanush literally took the banking stock in a tizzy. So there is a lot of opportunity for us to improve valuation as and when we give a lot of value to the investors by way of making some investments. And I'm sure that will come out in the days to come, by which the government and the banks will start to interact in a much more fruitful manner. But yes, it is a big challenge, and some of these Basel recommendations for reducing capital by way of, whether it is net derivatives or the other things, have always are in the domain of the regulators. I'm sure they will be looking at it. But instead of that, I think the way forward, as one of the panelists had said, is to make sure that we are a profitable bank, and we will plow back as much of capital as possible. And then finally, the economists panel, I think this is the first time as banker, I knew there is something more than CPI and our repo rate. And there are a lot of things into health and education, as Dr. Gokaran has, linked that to the poverty structure of the country, and how these sort of things impact the poverty relationship between poverty and money. Some terminology which I've heard for the first time is, I think we take back a long thing. Core of the core inflation is never is something that is beyond me. I think that is something that we don't really measure. And of course, Prachi's high frequency data for exports which need to be analyzed, I think that is something that we should be doing at the banks as well, in terms of how the data and analysis has to be analyzed for a better, and strong bank. Sajid's, of course, talk about the next capital cycle being vastly different, and to measure the leading and lagging indicators. I think that is something that is really very important. And of course, as Dr. Gokaran has talked about the average cost of treatment, and how there is no intermediary between the primary health center and hospitals. Mr. Ranade's PMJDY and the deduping accounts, which has created 30% space for us. And of course, Abik's competition for disintermediation, and that the demand from long-term funds is limited, and the acceptance that the gradual investments will tend to pick up over time, is something that I think these are things that we need to be much more aware and much more tracking in the banking sector. Thank you very much to all of you. First of all, to the Honorable Finance Minister for taking his time out and being with us and inaugurating the second conclave. To the Honorable Minister of State Finance, Mr. Jayant Sinha, the Governor RBI, Dr. Rajan, distinguished panelists, all the four panels, distinguished audience, without whom the sort of participation that we saw from the audience was stupendous. Thank you very much to all the audience who have sat through this conference and participated with vigor. Panelists from SBI, Mr. Kannan, Mr. Pradeep Kumar, Rajneesh Kumar, Anshula, and Dr. Soumya Ghosh. Members of the press and electronic media. Big thank you to the organizers here, including Taj Hotel. And finally, to our chairman, Mrs. Arundhati Bhattacharya. I think she is a living force behind this conclave. I don't think we could have even visualized or done anything on this, right from choosing the topics to the panelists to almost everything that has been successful here. The credit goes to our chairman. Thank you very much, ma'am, and all the very best, and have a good evening.
Like all things, good things, it has also come to an end, our conclave. Please join us for high tea. Thank you.
This is a story that celebrates diversity across India, across cultures, and spans the world. This is not just a story about the State Bank of India. It's the story of our customers.